Dell Technologies and Intel present ETRise, India on the Move, strengthening India's supply chain to power self-reliant MSMEs. Digital transformation partner, Salesforce, credit empowerment partner, TransUnion Civil, trade finance partner, Drip Capital.
Access to formal sources of credit has been a perennial problem for small businesses in the country, and COVID-19 has only aggravated the situation. The pandemic has also hastened the need to adopt technology. Small and medium-sized enterprises understand the need for adoption and integration of digital technology, but they face numerous barriers. How can we enable greater access to finance for MSMEs and reduce roadblocks? How can we enable small businesses to be a part of the fourth industrial revolution, increase their competitiveness in a global economy, and increase their ability to stay operational? To discuss more on this, we have Sanjay Sharma, Managing Director, iFinance, Rajive Chawla, Founder and Chairman, IamSMEofIndia, and Gokul NA, Founder, Design Technology and Brand, CynLr. Thank you for joining us and welcome to this panel discussion.
Thank you, Neha.
Thank you.
Thank you.
Good afternoon.
Good afternoon. Sanjay, if I can first come to you, what is the current state of MSME lending, the funding gaps, and the role technology is playing in providing funding to MSMEs?
Neha, the present state on MSME lending is that there is a very large gap. And I think various studies tell us that the gap is in trillions of rupees or billions of dollars. So it doesn't matter whether it is 3 trillion or sometimes it's quoted as almost 7 trillion. And I've also heard 21 trillion rupees as a gap. It's a large gap. Now, and a lot of this gap exists at the bottom of the MSMEs. So a lot of it is in the micro and in the small segment. So that is a very large piece, and that's a different solution versus the people who are typically in the middle of small and medium. But even the ones which are small and medium still have the gap. In very short, in a summarized way, the ones which are sitting in the medium and the small category, their problem is that banks do not lend to them to the extent they want. Second is that a lot of their supply chain money is stuck, and TREDS is trying to help, but TRED is not very widely used. So they have a lot of working capital requirement, which is unnecessarily stuck in supplying to large enterprises. For the ones which are in the micro segment, the problem is different, where no one lends to them. Banks don't lend to them, NBFCs don't lend to them. Some of the fintechs have started to look at them and lend to them because you don't have the regular documentation available, you don't have prior credit history, etc. So there are different problems there. So if you ask me what is the current state of MSME lending, it is poor and it needs to improve. There are huge funding gaps that I mentioned, and the technology can play a very big role here, because one of the problems, especially in the micro segment, is how to underwrite with sparse amount of data and very little documentary data available, and how to keep the cost low, where technology can help substantially.
Right. So you're saying the lending of the situation regards lending to finance to MSMEs is poor. I want to come to Rajiv and ask that what is the state of MSMEs per se in the country? Has the sector recovered?
All right. Thank you so much for inviting me. In fact, like any other, question, if I may say, there's always haves and have-nots. And there are always people who've revived. There are always people who haven't yet revived. And are you talking about COVID times? And then I'll focus myself here. And let me be very frank that COVID actually impacted MSMEs the most. And but that is one sector which has been totally devastated. The first wave of COVID in 2020, which resulted in lockdowns, brought in huge challenges for the MSMEs. And when they were about to revive, when the government announced 20% emergency funding for the then MSMEs which were connected with the banks and all. So there was some relief package in the first COVID wave. The second COVID wave was even more devastating. And that was the time when not only lockdowns, but large number of deaths happened. And I personally know many entrepreneurs who lost their own lives and faced huge challenges. Unfortunately, post second wave, the relief from the government was lesser than the first. A huge recovery in terms of GST. I mean, if you look at the GST collections, they touched as high as 1.6 lakh crore. And that in itself is a reflection of where our economy was moving. But then inflationary pressures and other pressures have their own set of challenges. So typically, I would say that yes, there are some sectors which are still reeling under a lot of pressure. Sectors like hospitality, travel and tourism, especially the hotel, the restaurants, and those with debts, they have a huge challenge because 2021 and then 21-22 also, they did not revive as much as they should have. And so many of them, in fact, have become NPAs as well. I was going through a newspaper report where in Himachal Pradesh itself, more than 100 small hotels are being auctioned by the banks because they have NPA status now. So that challenge remains. You look at the other sections of economy, manufacturing has revived, exports have been all-time high. So our economy today has both plus as well as the minuses. However, I would still believe that most of the MSMEs now are moving towards a positive pattern since they are connected with all MSMEs which are connected with the digital world, the online world, the automobile sector, the pharmaceutical sector, the health and care sector, and in fact, even travel and tourism in this year, 2022. So there's a huge, there are hardly sectors which haven't revived. And the challenges, however, are different, and we'll touch upon those later.
Right, of course, the challenges continue and they have been hard pressed. MSMEs have been hard pressed. At this point, I just want to bring in Gokul and want to ask that when we talk about digital transformation also, there are a lot of costs associated with it. So given the current economic landscape and also some of the points that Rajiv mentioned, can MSMEs afford it?
There are sectorial differences. How the adoption costs are different in different sectors, and the availability of finance from the perspective where they can actually get. And there's also a bias in digital transformation, and the availability of digital assets for them to adopt is also, our technology basis also is biased. Different sectors have different ease of adoption. So the cost would again be, and where the digital transformation has focused more. So when they started building when we talk about Industry 4.0, and we talk about a lot of technologies that are associated with Industry 4.0, and there's a lot of analytics and a lot of payments related transformation that have happened, right? And some are for small transactional payments, some are for international payments, right? Sectors that actually have a lot of international payments and international transactions, that has a different kind of issues that they face. And the costs typically that are involved is again is more volumetric. But for small organizations, for bigger organizations, it's much more convenient. The digital transformation is a lot more convenient because you're able to justify it. The cost of this technology is about the variety of tasks that you do. Even within an organization, a continuity of tools are not there. A continuum of digital transformation is not there. You are playing with variety of different features, right? The moment I'm talking about variety, each module costs a lot more for me to implement, right? If I have a lot of volume happening in that, then it makes sense, right? But MSMEs have a lot more variety of tasks, than having a volume of one particular problem. If I'm having a recruitment that I have to, make a digital transformation about, or payments that I have to do a digital transformation about, I still have to buy the whole module and have to prepare myself to be able to adapt to it, right? Which costs the same thing even for a bigger organization versus a smaller organization, except I'm not able to fully utilize it. What I need is one bit of this and one bit of, HR, or one bit of a branding, one bit of probably a technology tool, right? So I need all of that, but I don't need them in continuous usage. I need them when it is needed, right? So something that looks from variety, but from large volume use, paper use kind of a segment is not there yet completely for me. There are people attempting to do that. They are seeing that labs and they're trying to do it, but it also costs to build technology, variety of technology. So somewhere that gap is there that we are trying to address. It's not as cheap, or cheap is more from, it's not as utilizable for the cost that we buy for from a digital transformation perspective.
Right. And Sanjay, if I can, come back to you, can initiatives like, say, co-lending, account aggregators make a difference? RBI also has a system of regulatory sandbox. Why are such initiatives important, and what will be its impact?
Neha, without any doubts, new initiatives are necessary. And I would say that all the things that you mentioned, co-lending, account aggregators, the regulatory sandbox, are very essential if we are to break this logjam of not being able to lend to MSMEs. As I said that, that for tens of years, we have not been able to make any success out of lending to MSMEs. So if we continue to follow the same method of pushing the banks to lend or giving them regulatory directions, things are not going to change. So co-lending is a good approach where you are saying that if NBFCs want to move in this space, and one of the challenges is the cost of lending, then funding can be provided by the banks through this co-lending route. Account aggregator is another great initiative where we're saying that wherever data is not available, people are not able to, the borrowers, MSME is not able to provide you the data in the format you want. At least the aggregator might be able to provide you that information. For example, one would like to know what is the credit history, which we can get now. But if I want to know that what is the bank transactions like, what are the transactions they have on e-commerce sites, or what is the utility payment transactions do they have, it can help build the credit profile of the borrower. And I think that will help in making lending possible. The regulatory sandbox of RBI is a good initiative. They have regulatory sandbox for various topics. MSME is one of them. MSME lending is one of those regulatory boxes. And I think a lot more work needs to be encouraged to get more and more companies in that regulatory sandbox to test out various ideas. In fact, I think among the regulatory sandboxes, that should be one of the big focus areas for RBI. So my sense is that when you do many of these things, new thoughts will emerge. And already, I think the last 2 or 3 years, we have seen that there are many companies that use technology in a different way, and that look at how to underwrite in a very different way, and they are beginning to see success. We, for example, use a lot of technology, especially on data science side and using cluster-based underwriting. And in the last 8 years, we have given loans to more than 400,000 micro enterprises. So there can be many such iFinances which can help at least reduce the problem. I think we've still scratched the surface because there are 6 crore enterprises. So, but I think you need these different ways of looking at things. Only then will we find some solution. So my vote is a very strong yes to all these initiatives.
Right. On a similar note, Rajiv, I want to ask you about the role of fintech players in the lending domain. Is fintech lending accessible to a large number of MSMEs, and is getting funding through fintech as easy and convenient as it is made out to be?
Only about 17% of the MSMEs today have access to the formal credit sector, which means that by and large, about 83% till date, they don't have any access from any organized channel. So no access to banking or MFIs and other routes. So informal sector as you can call them, and going, even the fundraising would be informal for them. So naturally, the cost of funds and the access to credit for them is huge. And considering that there are almost 6.3 crore enterprises in the country, which means more than 5 crore of those enterprises still don't have access to the formal channels. And even for the even for those 13 or 17% which have access to the organized lending through banks and other NBFCs and all, believe you me, the challenge is huge even for them as of now. For example, if you look at any balance sheet 2021 and 21-22, now that balance sheet has shrunk post-COVID. There was a lockdown for 3 months almost in 2021. So the revenue inflow was hardly for 9 months for the fortunate ones. And while the expenses were for full 12 months, the fixed costs and others. So their balance sheet shrunk in 2021. Some sectors naturally suffered much more because of the hospitality, the travel, tourism, hotel, and many others. So even for them to go to the bank at this time and seek enhanced CC limits, enhanced working capital, or some enhanced term loan for capex or something is another challenge. And second challenge, of course, is the availability of collateral. That the banks somehow have not enhanced their LTV. They would still look at mortgaging. They would, in fact, in the MSME sector, many times I often say that it's only LAP that's functioning, because mortgage becomes the prime thing. And after that, of course, the bank will have, receivables and stocks and the entire plant and machinery. Everything is mortgage, plus the collateral security. So if you look at the real, credit that emerges from, the entrepreneur's capital is scarce. 1 crore worth of mortgage would give, let us say, sanction of 75 lakh rupees of loan. Now, to avail that 75 lakh rupees of loan, there's another 25% cash margin that the entrepreneur needs to put while buying raw material or something else. So the real, we've hardly utilized the wealth of the nation, even to fund the credit-worthy MSMEs or those which have access to the banking sector. So the challenge does remain, and the government did start some initiatives, great initiatives like CGTMSE, where loans up to 2 crore rupees are accessible to MSMEs without any collateral security. And yet, when you go to the field, you would find hundreds or thousands of entrepreneurs struggling to raise funds, especially the startups and the new ones. So the government, of course, is trying its best. They started Mudra scheme. Now there's the Prime Minister Kaushal Yojana, Rozgar Yojana. They give loans up to 25 lakh rupees for the micro sector, up to 25 lakh rupees. So idea is to give them some funding. All that is through CGTMSE, and government is now they put in more funds to strengthen CGTMSE, and they are now planning to enhance this 2 crore funding to maybe even up to 5 crore. So some of those initiatives are with the government, but then let's understand that the requirement of the nation is much more, many times more than whatever is coming our way. And therefore, I believe there's a huge role for MFIs, that is the microfinance institutions, and the fintech. And in fact, most of the MFIs, the very successful ones, are engaging with the fintech platforms. And it is happening, it is real. Many people in my organization, they are, just recently, one of my colleagues in my office just mentioned that he just took a 4 lakh rupees loan only on click of a button, unsecured funding, and at a very reasonable cost of 11.5%. So at 11.5% in today's time, if a youngster or a newcomer is able to raise 4-5 lakh rupees, and that too unsecured, totally from fintech platform, only on account of the fact that he maintained a savings account with a particular bank, I believe it is remarkable. Second, factoring, or the trades platform. All these are engaging examples of the digital world and the fintech world. And there are many platforms now which are available. for example, rupees.com and many more, where they are bringing a lot of finance companies, and it's an open platform where MSMEs are taking pre-sanctioned limits, and then just on click of buttons are getting their bills factored or bills discounted. And TREADS, of course, is one such thing where the government is now, so far, there is no penalty. I mean, even though government has mandated that all the companies with turnover of 500 crore plus, and every government institution, every public sector enterprise must go to the TREADS platform. However, but there's no penalty as such as of now. Idea is only to promote this. And now the government wants to bring it down to maybe even 250 crore plus companies. So in times to come, I do believe that whether it is TREADS platform or whether there are other fintech platforms, they are going to have, in fact, that is the only way to provide liquid fund working capital to the millions of entrepreneurs in our country. It is actually happening. Fintech is a wave which is real, and idea is to have a digital presence. And youngsters today are extremely aware of the CIBIL rating, and I overhear them sometimes discussing their CIBIL scores and other things, which is a very good thing. Idea is that they must be aware and about these platforms, how to build their own profile. Today, a youngster creates amazing profile on Insta and Facebook and other social platforms, and they really engage with people, make them friends, they have their own groups, etc., etc. Similarly, now they are creating their impressions, their histories with the fintech world, and that is something which is going to change the face, the way financing is actually done in India.
Right. So all this obviously goes towards building the right ecosystem for MSMEs and the awareness, as you mentioned, which brings me to a question for Gokul, that if MSMEs have to go down the path of digital transformation, how can an effective ecosystem for MSMEs be built that has the potential to accelerate the adoption of digital technology?
See, we have to also look at the fact that most of the MSMEs also are less structured and less organized, and too much of variability in what they offer as value, right? Even within manufacturing, you have so many different categorizations. If it's consumer space, there is so many different categorizations, and they always kind of, not everybody is directly connecting to the consumer. They might be augmenting a majority of them are augmenting a bigger organization or a bigger sectorial player, right? So when I'm in that space and I'm trying to do that, a lot of them go about making it convenient to their major customers or start adopting technology in that fashion, right? Often it's better if the ecosystem is, if you are in a pyramid of a supply chain, right? So and there is a sectorial dominators that are there. Let's say in automotive supply chain, there are automotive big players, and there are all the other MSMEs who are producing parts and supplies and sometimes even services for the case that they actually provide. It is better if it is better organized by the bigger players, and then it starts translating from there to the lower rung of value creators in the chain, because it's easier for me to create a continuum and then hand over from one value creator to the next value creator, one part creator to a next part creator, right? So that awareness in looking into the vendor health and the supply chain health from a bigger organization perspective needs to happen, and they also have a much easier access to the tech and digital technology, right? And they drive the transformation, digital transformation, and that's where it actually comes from, and they kind of fund that in a certain way, and they are also a better experimental ground from the perspective. The other only way is to create aggregating organizations. Some examples there are today: the mechanical service providers, small lathe factories, and things that they actually have. They don't understand where the demand is, where the supply is, and there are some aggregators who come in between to do the digital transformation, which I can piggyback on, right? And all the other organizations can have that as one common junction for them to be able to interact in between those structures. The third thing I also want to bring is, whenever we are looking at this, we need to look at it from two perspectives. One, the transformation that you want to bring about for the internal processes that you have, right? And the other for the external transactions that you have, right? For example, adopting to digital payment is, we also talk about blockchain as a technology and all the other sectors that has been there, right? The preparation is more when I have to think about all this technology adoption. The first thing is I need to know which tech fits to my case, right? Not all tech. Everybody who builds a technology, I'm a technology builder, so I'll start promoting the fact that it's solving a lot of things. But at the same time, when I'm also sitting in the place where I'm adopting someone else's tech from that perspective, I cannot just say that there is one fit all solution. Often, if I am for an internal process, but when it comes to external process where I'm subscribing to the infrastructure the society has built and kept, right? Be it from the payments perspective, be it from the legal perspective, compliance perspectives, those are the things I think we could pretty much we are already ready to adopt, because the other side which needs it, which is from a government perspective, had done a lot more of transformation from adopting technology from their side, right? Which also makes it convenient for me to immediately change my process. Somewhere I've already started changing my process unconsciously, right? So it's quicker and faster for us to do that, and it also takes the mind space away for us and start focusing more into what I want to do, what I'm actually delivering as a service, not being caught to adjust my operations internally to fit to what I'm doing for an external transaction, right? So that I think the transformation there is a collective transformation that has already happened, and significantly it's happening, especially from a payments perspective and payment automation, payroll automation, and from that perspective, and maybe from a perspective, things like blockchain and these.
So, Sanjay, taking off from what Gokul said, for digital transformation, there are a lot of digital lending products that have come, and Fintech is also a wide umbrella of different types of products and services. So which segment, according to you, holds the most promise? And also, what do you think are the limitations of Fintech when it comes to lending to MSMEs?
Yeah, as we know, fintechs can be engaged in lending where they are lending tech they're using, or they can be into insurance and they are insured tech, or they can be also in regulatory and so many other areas. I think it's the lending tech which holds the maximum amount of interest for most of the investors today. And I believe it also holds the maximum amount of potential to do good and take care of the gap that MSMEs face. So I think, in my view, it's the lending part of fintech, or lending tech, you could call it. Now, there are lending tech that applies not only for individual borrowers, and you have a lot of personal loans and buy now, pay later sort of loans coming up. But there are also many applications which relate to corporate lending or to lending to MSMEs. Even the buy now, pay later somewhere will help the business because it gets them more customers, but it's an indirect benefit. But there's some direct lending also happening towards corporates. Now, it can be either a direct loan, like a loan being given with the installment. It can be an overdraft limit. It can also be a supply chain sort of limit where every time you buy from your supplier, you can avail credit, and that credit self-liquidates when after a few days, a few months, based on when you sell, you can pay that back. So I think these are the places where maximum potential exists. Have the fintechs created a huge impact? I think the impact is there, but it is still very muted. And I think the fintechs have not even scratched the surface of the problem, and the problem of few trillions that I mentioned. I think we are far from making a deep impact. But do I see that in the next 3 to 5 years that they would have made a significant impact on the problem? Yes. And I think it will come in both the areas. It will be in the middle and small MSMEs where as Rajiv ji was mentioning that, that you want larger limits of 75 lakhs, a crore, 2 crores, and even going up to 5 crores. Their fintechs will play some role, and there the role of ECLGS and credit guarantee, etc., will be a big dimension which the government controls. But in the lower segments where the need is probably 10 lakhs, 15 lakhs, 25 lakhs, fintechs will have an even bigger role, because here there's very little regulation. very little support from, there is support from credit guarantee, etc., but the supports are very onerous because they are operationally, they need a lot of effort. So there, I think fintechs will have a bigger say. And it will take only 3 to 5 years for that to become apparent.
Okay. Okay, and Rajiv, you mentioned earlier about the finance and the credit concerns for MSMEs, but on, just taking that forward, of course, access to finance has been a perennial issue. So what more needs to be done and how can it improve?
Okay, I think I'll speak from 2-3 perspectives. First, I'll say entrepreneurs. I'll talk, there are a lot of things that we need to do ourselves. We must understand that tomorrow's financing or the fintech world, which are bringing in great solutions and which are expected more to multiply the next 3 to 5 years, manyfold. In fact, we need to build a digital impression. So idea is that do I pay my employees digitally and not in cash? Do I pay my EMIs regularly? As it is, all private limited companies have their database available at the MCA portal, etc. So organizations like Probe 42 and then Sybil, and there's so many other platforms where the data is extracted by any finance credit manager anywhere in India or anywhere in the world for that matter. I believe we need to build that. So entrepreneurs must understand that all this is actually, point is, it's not always that I don't get credit. Sometimes I may not be credit worthy. So we have to build our credit worthiness through the digital mechanism. This is one. And today the entire operations, can be digitalized, must be digitalized. And at least in terms of wherever finances are involved. For example, even in income tax, I cannot, all my expenses are disallowed if I make cash payment above 10,000 rupees. Now, what is 10,000 rupees? Minimum wages, let us say, in my state are more than 10,000 rupees, which means I cannot even pay cash salary to anyone in my organization. So, and I think this is what helps. And look at the benefit that my employee gets just because I am paying everything digitally. The ESI, the Provident Fund, and the digital salary transactions, how easy it is for them to raise some funding at the time of home or some marriage or something else in the family through the fintech world, because then their one bank statement reveals everything. The number of years in the job, what is the salary which is coming, etc., etc. So I believe that this digital impression creation is very much in our hands, and entrepreneurs must understand this, and they must build this domain for themselves. Second is, let us say, for the government. They need to strengthen CGTMSE. They are doing that. Every budget, there is some more allocation for CGTMSE. And now, as I mentioned, from 2 crore, it can go up to 5 crore in times to come. So collateral-free lending, unsecured lending, guaranteed by the CGTMSE trust. It empowers NBFCs, MFIs, and banks, to become more aggressive and to take risks, even in areas hitherto unknown to them. So that is another very important thing. And government is doing. I believe they should do more. From Reserve Bank of India, I expect that they need to play a very important role. And I have seen a lot of hundreds of entrepreneurs, facing the pain of prepayment penalties and foreclosures at a time like COVID. People, because of uncertainty, willing to sell their homes or their cars just to prepay a loan. There a huge prepayment penalty of 4% to 5% is demanded by NBFCs and public sector banks from them. And I believe it is almost criminal. It is almost sinful for them to demand prepayment penalties at a time like this, disallowing their existing entrepreneur to move from one bank to another, even though they're getting much better terms there, only on account of a clause of prepayment penalty. So I believe it is virtually, it's a virtual slavery in many ways, where entrepreneurs find it very, very difficult. So I believe that RBI also must look at the present times, evolving times, and at least from the MSME sector, where the lending is at the variable rates of interest, these prepayment penalties and foreclosure things should not be applicable. So and then third, of course, I also believe that why there should be capital gains if someone sells a home and brings in money in enterprise. For example, one can sell a home and buy another home, so there is no capital gains tax. But then a lot of entrepreneurs who don't have access to the bank credit, if someone sells a home and brings that money to start a small enterprise, and there is capital gain tax available. So I hope that some policymakers someday would understand that at the grassroots, where a lot of entrepreneurs are bringing their own money, idea is to let them have access to that. And then, of course, from the financial institutions, I believe that they have to be very engaging. They should try to reach out to entrepreneurs, see how they can bring the barriers down, and let the wealth of the nation unlock to its fullest, and enhance their LTV. Why should you give only 70% of a collateral value? Why not 80%? Why not 100%? Why not 150%?
Right. And you also mentioned about how digital impression creation is very important for MSMEs, and a lot of benefits can accrue to them if they take to that. But
allow me to add, I mean, GST is one such thing. And today, a lot of NBFCs and Fintech, purely on account of the cash flow, one look at the bank statement and one look at the GST returns. And I'm sure their artificial intelligence mechanism, if inbuilt into their system, can automatically sanction CC limits and term loans and other exposure norms. So AI, which can read GST, which can check the data, digital data available about any enterprise, I think this combination is something which must automate and make credit availability very, very easy in times to come.
Right, but at this point, given what all you mentioned as well, I want to bring in Gokul and ask him about some of the barriers which exist to the implementation of digital technologies for MSMEs. How can tech adoption prove to be less of a barrier in the present time?
So the moment there is usually anywhere the technology adoption, right? So the moment we think about a technology, then we also think about uniformity in the way it's been applied. The variabilities that each of these, the scenarios that it actually keeps changing, and the variability that it actually brings a lot of variety, and having a very generalized, if I'm bringing a generalized technology, like we are talking about Industry 4.0. So Industry 4.0 is a common talk everywhere, and it's prominently trying to promote the adoption of a proven set of technology. And this era predominantly has done from connections and communications, right? So the data and the movement of data and the way you could disconnected data from one portion to another portion could be connected to the tools. There are several amount of tools and there are several amount of technology adoptions, and it kind of has percolated inside, even without we consciously realizing. And the way we leave digital traces everywhere, just like Mr. Raju was actually saying. Even the level of tracking and the transactions are being constructed it's more in a structured manner that actually happens, right? So, but when it comes to the challenge to adapt is not having an uniform. Either we are not being uniform in the way we are doing things. We are trying to do the things. Usually, we get the space for us to operate this business because a big organized sector is not able to do that, right? And that's where we come in as a portion, which means no two organizations might be very similar, and the challenges that we face and the needs that we actually have is also a lot more customized. So, but the moment customization comes into it, the adoption cost also increases, because I might get a basic technology, but to access them and start using it, I need someone else coming in between and then translating and transforming into the way I need it, right? if the sector permits me to use it, once I have made that digital technology, right? Let's say the way of method of payments or method of, I come from an automation space. Some tech that I've adopted for the automation, let's say, is being structured and then being kept, and for me to use it, if the need for it doesn't change very frequently, then it's at least is viable for me to take that, right? But the moment I have done this customization, made someone implement the tech, and I've started learning to adopt it, and if the needs have constantly have changed and they are transforming, and I have to react to it if my customer is adopting something else, then that becomes a huge trouble for me to go access. And this is the major reason for me to not adopt. We don't have ready-made tech that you can open the box and start using it, right? Often when it comes to these kind of sectors, you need someone coming in between and putting those pieces together to fit your needs, right? So preserving or insulating that investment that goes into such tech from the future changes is a huge problem.
But having said that, there is still what exists today is a wonderful platform. We have with the Aadhaar card coming in, the identification of a customer, the KYC requirement has become extremely simple. The credit bureau being online, you can ping a credit bureau straight away and get feedback on the customer. So there are many things that are playing into what fintechs can use well. So what I would say is that there is a lot going for the fintechs. It's not that it's a struggle right through, but more can be done. And this is one area that holds promise that we, in some time to come, will solve the problem of the micro and small enterprises in terms of providing money where the enterprises deserve to be lent to, and where which can allow them to grow further.
Right. And Rajiv, if I can bring you in at this point, we spoke, of course, about digital and technology adoption and how it has accelerated after the pandemic. But from what you see around you, how are MSMEs responding to this shift towards technology? Do they need more government support, perhaps?
Okay, there is no option. Let me admit that the world has to move ahead. And the digitalization drive started many years back, and then we saw what we often call as demonetization, which actually to me is digitalization. Great movement, the time that actually changed the way businesses are being done, or they started working. And then with GST, which was another game changer, things happened. And then the way the entire taxation system today is working, all the data that the government is collecting, the way faceless assessments are happening, the way all labor compliances, all taxation compliances, everything is around the digital world. It's mandatory to make all payments online, whether the GST payment or TDS or TCS or ESI and Provident Fund and Welfare Fund and hundreds of things. So my point is that there is no option, and this is the only way ahead. And so therefore, it is very important for SMEs to understand. And those who are able to adopt this are what I call today organized. So when we say organized SMEs and those exit unorganized, to me, it's about SMEs which have adopted digitalization good enough and those who are still struggling. And this is what reflects in their balance sheets, in their profits, in the size of their business, in their growth patterns, and even in their miseries. So organized people are able to revive very, very fast post-COVID, and there are hundreds of entrepreneurs doing amazingly well. And while there's a large segment as yet struggling, to me, they are the ones who have earlier missed out on some of these digital revolutionary things, but I believe that is where they should be moving ahead. Let me also mention, and this is something I would like to tell Mr. Gokul here, that there is, the three things which are very important. And I just hope and pray and wish that those who create digital solutions for for the world understand this. One, every digital solution that has ever been created, actually till date, I think it was for some large corporate. So whether the first ERP was made, it was made for some large corporate. Companies like SAP, when they came, they were for large corporates.
What are the futuristic technologies that can help SMEs be more prepared for Industry 4.0, and how can they counter challenges from a technology readiness perspective?
Right. So frankly, my exposure is a lot more from supplying things as an infrastructural, from an automation perspective, right? So what I am building as a tech, or what I am supplying to the customers and from the sector. So and on the other hand, the narrative about these tool chains and the benefit of these tool chains are also is minimal in the popular media space and information space. More towards more futuristic tech like blockchain, which is yet to make its dent and make its proof, right? So I would say spend lesser energy there and spend more energy in what is already available for us to adapt, and that adaptation is lesser. Frankly, it's lesser in a lot of these sectors that is actually there. Otherwise, also investing in right and appropriate tools and machinery inside your organization. If you are in a sector where your infrastructure rich and machinery rich, right? So try to pick tools, even if it is at a higher cost, that are more connected into the internet, right? So, and IoT is a bigger space, but IoT is not as organized or as structured, universalized as my solutions for payments and these things are. But having them connected to the internet as an infrastructure helps you later to adapt future technology, right? So you can bring your whole machinery and infrastructure into readily available for you to adapt any kind of tech that might actually come. So today, the biggest barrier for Internet of Things to work or that sector to even push inside and make some valuable contribution is simply because most of the devices are disconnected, right? First, I need to be able to lay down the infrastructure in such a way that they are connected, right? They're connected to the internet, they're connected to the monitorability, they're connected to be part traceability, they're connected to be to be able to track those information, right? So from a hardware technology point of view, if we are adapting tools and machineries into our, even in a very small format, ensure that you have access to expand it to connect to the internet tomorrow, because the moment things start getting connected is the only way by which you can have a general solution. You don't have to look for a customized solution, which is usually very costly for it to adapt. It goes in a negative spiral. The moment you are connected, you can share technology that's been given or built for somebody else or some other sector to also for you to try and then start adapting that very quickly, right? So that is from a hardware perspective. Try to keep them all connected within internet, right? Of course, security issues will come, so that's next thing for us to first adapt to connect your tools and devices to an internet spectrum, right? So yeah.
Thank you so much for joining us and telling us more about digital transformation and how that is the only way forward for MSMEs if they have to take the next leap towards growth. Thanks once again. Thank you for joining us today.
Dell Technologies and Intel present ETRise, India on the Move, strengthening India's supply chain to power self-reliant MSMEs. Digital transformation partner, Salesforce. Credit empowerment partner, TransUnion Civil. Trade finance partner, Drip Capital.